Okay, students, my camera cut off on me about 20 minutes. I guess I have too much on it. Anyway, we need to come back and finish this problem. Adjusting entries continued, and we were actually looking at Net Solutions. The page we were looking at the Net Solutions adjustments. We were down to the bottom of this page on the second page, and I want to finish up the second page. Now, I had gotten through one entry. We were looking at the original entry for Net Solutions here, where they purchased $2,000 worth of prepaid supplies, and the company used $1,240. I had just made the original entry, which was done back on December the 31st, where they bought the supplies, $2,000 worth, and they credit cash. Okay, they put the supplies in their file cabinet, and then they come back and they have used some of the supplies by the end of the month. Like I told you, if you go in the file cabinet, you start taking pens and that sort of thing out, you're using some. So, we didn't state what kind of deferral this was. You have two choices, deferred revenue or deferred expense. If you're using an asset up, then what you're doing is you're transferring it to an expense, and so you would debit supplies expense for the amount $1,240, and you want to credit your asset, which you had originally set up, cost supplies, or you might want to call it prepaid supplies, prepaid, either one. Sometimes you'll see the word prepaid supplies, $1,240, and this is to record the adjustment. Okay, now if you remember, I told you that on the adjustment you'll have two types of accounts. You'll have a balance sheet account, that's going to be the prepaid supplies because you're reducing an asset, and you'll have an income statement account, which will be your expense. And what happens on your balance sheet, you had your supplies, or you can call them prepaid supplies up there. You had put $2,000 worth of supplies there. You came back and you used $1,240 worth of supplies. So now you have $760 worth left. So your balance in that account, if you were posting to your general ledger, would be $760. And again, this is an asset. Okay. So the answer to what kind of adjustment is it? Deferred expense. Okay, it's a deferred expense. Okay, the very last one then is depreciation. This is a special type of adjustment we want to look at. It is a deferred expense. Okay, very special type. First of all, you buy a piece of property. You buy property can't be depreciated, but you buy a piece of equipment, and in this case, that's what happened. They purchased $1,800 worth of equipment. And let's just show that original entry down here, whenever it was, December the 1st. Debit equipment. Was it $1,800? It's debit and credit. And then you want to, I think they paid for it with cash here. They could have borrowed money, but we're going to pay for that equipment with cash. Okay. To record the purchase. This is the original entry that was done. Notice cash was involved. Now, we want to come back, and this is one that accountants know very well. We have to show depreciation, which is going to be taking that asset cost and writing it out over a period of time. So the journal entry at the end of the year or the end of the month, they said to record the use of $50. You want to debit depreciation expense for $50, and you want to credit a new account called accumulated depreciation. Accumulated depreciation for $50. And this is to record the adjustment. Hard to write. This is to record the adjustment. Now let me show you where these accounts go. Here's your income statement account. It's an expense. This accumulated depreciation is a new type of account called a contra. Contra means to go against the normal balance asset account that appears on your balance sheet. Contra, notice it's not an asset. Asset would have a debit, but it has a credit balance. Contra asset has a different balance, the opposite balance. And this is what happens. On your balance sheet, you would show your equipment at cost. Remember, you can't change the cost until you sell it, $1,800. And then you would show less, you need to know this for your take home, accumulated depreciation of $50. And so what we call the book value is $1,750. And every month we would add to this account $50 until we reduce this balance down to either zero or what we call the salvage value. We'll get to depreciation later in the semester. Do know how to present this because you'll have to do it on your take home. Here's the journal entry for depreciation, okay? And this again is a deferred expense. Now let me take you back and show you your homework. Okay, show you your homework. I want you to go back to your Wolf Den. Okay, look under Test 3 material. Pull up your lawn care homework here. Let's come down here. Let me pull it up and show you what your homework is. Okay, this has all 4 entries. 2 of them will have original entries. Okay, the due date for this is going to be Thursday, October 27th. You can pull this up as a Word document and you can type right on it and save it and email it to me by class time. Okay, you have to email this to me by class time on Thursday or it will be late. Okay, so this is your 4 journal entries. 2 of them will be deferrals with original entries and 2 of them will be accruals that do not have original entries. About a gentleman who started a lawn care business, so see what you can do with that. You'll be calling the revenue lawn care revenue, okay? So work through these, email it to me by the 27th at class time, okay? Talk to you later. Take care.